Hello and welcome, Metastock users, to this video number 2 in our 6-part educational series from GoNoGo Charts. My name is Tyler Wood. I am a CMT charter holder, and today, as always, I'm joined by my co-founder and best friend, Alex Cole. How are you, buddy?
I'm very well, ready to go.
Awesome. So in this second video, we're going to build upon exactly what we were discussing in video 1. Talking about trend identification, we're talking about the rules-based approach that we can take as traders and investors to understand the weight of the evidence. We want to use multiple technical indicators. We want a multi-factor model, if you will. However, we addressed one concern, which is that the more indicators we have on our chart, the more likely we are to introduce analysis paralysis and become overwhelmed with information, which then brings us back to that more subjective decision making. When do we take an entrance? How many of those items on the checklist need to be met before we get out of a trade, right? And that can introduce a lot of problems for our trading account. So just as a quick review, the solution from GoNoGo Charts was to take all of that weight of the evidence, that robust set of data from these wildly impressive technical tools that the community have developed over the last 50 years. Now we want to use those, but in the background. And what we display on our chart is an algorithm. It's a multi-factor model that's going to show us, rather than keeping it hidden in a black box, but show us the signals in real time by painting or color coding the bars or candles of your chart. And so in a GoNoGo chart, we can see that when we're in aqua and blue bars, we're in go trends. When we are in pink or purple bars, we are in no-go trends, the weak and the strong form. And those amber bars, that area of neutrality, is when it's time to go fishing. So go, no-go, or go fish. Now, Alex, let's talk a little bit about successful billionaire hedge fund managers who use trend following to their advantage.
Yeah, we love this quote. This is one of our favorites, and it really sort of speaks to what we're trying to understand and what we're trying to get to when we're looking at charts. And that is that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. And this was said by Mark Abraham. And what a great quote that is, right? We know that. That is the hopes and dreams and fears of everybody in the market that collectively determines where price goes. And all we can do and all we need to do is analyze price. So we need to keep price at the forefront and in focus.
You know, just to extend the idea here, Alex and I talked about not predicting where the market is going, but rather reacting responsibly to what the market is telling us. And if you ask any CMT charter holder on the planet, my guess is they will tell you that long-term trends are going to be driven by the fundamentals, expanding GDP of the country, the macro economy. However, as investors, if we are going to be widely diversified, we're going to have holdings where we can't possibly have a very deep fundamental knowledge of the management team and the balance sheets and all of the drivers of those fundamental estimates. I like to say that as an investor, we might need to allocate to Taiwanese semiconductors if those are in outperforming trends. I don't know the first thing about semiconductor manufacturing, and I certainly don't have advantage or insights into what's happening inside those companies in Taiwan. But I can be an informed investor knowing that the market is distilling all of that deep fundamental knowledge and giving it to us in a very elegant single data point, which is market price. It's never restated. It's not an estimate. It's a fact. And it comes to us in real time throughout the day and every week and every month. And so as investors, we can take logical and informed positions in securities, even if we don't have an advantageous insight into the businesses in which they operate. So, Alex, let's move on. Quick review again of those go-no-go colors.
Right. So if you remember, we've got 5 colors on the chart. The blue and aqua make up our go trends, blue being the strong form, aqua being the weaker form of the go trend. Pink and purple make up our no-go colors, pink being the weaker form of a no-go trend, purple being a strong form of the no-go trend. And of course, the amber bars, those go fish bars often in transitionary periods or in periods of markets that are going sideways, don't forget, that's when there aren't enough conditions being hit in either direction to identify a go or a no-go trend. So those amber bars represent market uncertainty.
Excellent. Now let's take a look at this in real time, looking at the S&P 500 on a weekly basis. And when we think about trend following as investors, there are two things that are really important. One is the inherent risk management. If you are in a security that is in a go trend, you're using the tools responsibly, when do you decide to exit? Well, built into to these charts is the idea that the trend is going to be shown to you as having moved into a downward direction. The market is now trading against you. Or if you are a short seller leaning into no-go trends, where is it time to cover those shorts and get out of those trades? It's when the trend changes condition. And so on this chart, right, that first and most important element is that we get out through that no-go trend. Nobody can tell you what's going to happen next week or the following hour even, but we know that beyond this point, when we entered no-go trends, the weight of the evidence, the move was to the downside. And the second important element that we found as trend followers was that the market can have these very seductive relief rallies. And if you think back to how you were feeling in 2022, we were all rooting for the U.S. stock market to come back into those very bullish conditions that we had experienced through the end of 2020 and 2021. However, this seductive relief rally was just that. It's a counter trend rally within a no-go trend. Now, this is a weekly time frame. Certainly, if you're trading shorter periods, these would not be no-go bars. We're going to talk about that in just a second. The idea of trend following is that we don't get in the way of a market that is trending. We don't trade against the weight of the evidence. And so it keeps you out until that new go trend takes shape. Now, Alex, let's go back to our checklist, that chart that perhaps looks a little messier, but it's using really sound approaches to understanding trend from multiple factors. Talk to us a little bit about where we're at on this chart of the S&P.
Just as a reminder, this was an example of a fairly simple process, right? You and I have worked in the industry for long enough and with people for long enough to know that that was done for demonstration purposes only, and very few people are able to keep their chart this simple. But even here with those 4 or 5 concepts that we worked through, you're starting to lose sight of the clarity that you need. You're starting to lose that when you add indicator after indicator to your chart. Now, remember, you might have more panels on the bottom. You may have more indicators on the top. But you're starting to lose track of price here and starting to perhaps cloud your own judgment and leave yourself a little bit more confused in terms of what you're thinking looking at the chart. So we want to clean that up. We want to put all of this and other great tools, as you said. We're trying to use the greatness of those that have come before in the technical space, right? And trying to use all that information to keep our charts clean. So we don't want to go down this path of obscuring our chart. We want to be able to focus on price so that we don't end up with this problem.
Absolutely. And it's clear as day about when to get in or get out. And I guess the last point I would make on that is what a time to be alive, right, Alex? The amount of really powerful tools we have at our disposal, the great women and men of Wall Street and Bay Street and elsewhere in the world who've innovated and understood what was happening in those first principles of market behavior and gave us tools to help understand that. We owe a great debt of gratitude.
And what's amazing is that the time is really not that. My son thinks I'm a really old person, right? The speed at which technology is changing now is even faster than ever. But when I started working in New York in technical analysis, I worked with people that used to hand draw charts. So the time frame of how quickly technology has changed is incredible, and it's only getting faster, right? As my kids will tell me.
Point well said. Within the CMT community, there are many mentors and advisors who began in the business when it was all done by hand, and there's a lot we can learn from those fine folks. So here on this weekly chart of the S&P, if you find yourself over trading, right, you might want to lengthen your time period. But when we're looking at trend following, it certainly reduces the amount of whipsaw and activity in your account. Here we would just take 3 trades: to enter into a go, to get out at a no-go, and to get back in when the trend returns to a go. And I think that simplicity, the clarity of using all those indicators in the background to just have much clearer understandings of when trend has taken shape is really powerful. So let's move on. We've been talking about weekly charts. We've been talking about long time frames. But the beauty of technical analysis, as first taught to us here in the West by the OG technician, Charles H. Dow, was that markets move along multiple time frames. And he used this incredibly powerful metaphor. He was an accomplished nautical sailor, and he compared the markets to the movements of the seas. He said the primary trend, the very long-term view, is going to be like the tides of the ocean. This is unflappable. This doesn't change with the weather. Similarly, primary trends in markets don't change based on any individual's reaction to the markets or even sentiment extremes. What we're seeing is the underlying fundamentals. We're seeing the expanding gross domestic product of a country. We're seeing the macro environment being very conducive to driving these very long-term primary trends. However, markets don't move in a straight line. We have a secondary trend that's going to take us well above or well below that primary trend, the underlying bias or shift of the markets. And it's along this secondary trend that technical analysis can add a ton of value. We know that investors become despondent or become irrationally exuberant at different phases of the market cycle. We can use that to our advantage. Now, he compared that secondary period to the waves on the surface of the ocean, and then looked at this minor period as the ripples on the surface of the water. We know that from day to day or even intraday price action, we're going to see a lot of movement based on the emotions of investors. And that behavioral impulse to extend things above and below where perhaps intrinsic value lies, that's the human element, and that's where we can really capture a lot of value. What's important about multiple time frame analysis for us as technical analysts is that whatever time period you like to trade in, you can use multiple time periods to help inform your analysis. So if you are trading in this very short term, understanding that the primary trend is from the bottom left to the upper right will help you take advantage and participate in trends, knowing that you are on the right side of that trend. So let's look at this in real time. Let's use an example like Apple. Perhaps a little more precarious these days here in early 2024. But let's look at a very long time period. Each one of these bars represents a month of trading activity. Talk to us a little bit about the importance of polarity, Alex.
Yeah, so this is a great chart. I mean, Apple, of course, we know what Apple does. And you can see here, looking at the monthly chart, of course, very, very long time frame. You can see how this go trend has remained intact for 2.5 decades, right? So quite remarkable as a company. But what we want to show here is that we did build in weakness in the go-no-go trend when the inputs behind the scene are not firing to their fullest in terms of bullishness. We do see the weaker aqua bars, and you can see that every time we hit a high, we pull back, we can see the weakness reflected by the aqua bar. So that tells us as investors, okay, let's pay attention here. Let's see if this go trend is able to hold. And what's amazing on this chart is that it does hold, and it holds at prior highs. So that's the concept that you were talking about there in terms of polarity. So every time we've seen a new high, that then becomes an area that is likely to provide support going forward. So we see the weakness in the trend. We see price pull back. It pulls back to a level that was a prior high and finds support there over and over and over again. And this is very easy to see because there's nothing else on the chart, right? We are looking only at the price chart. And so we're able to draw those important levels, those key areas of support and resistance, while getting the sense of trend from the amalgamation of indicators that are being then calculated in the background and painted using the colors on the chart.
It would be very difficult to draw all of these support and resistance lines on a crowded chart, right? If we had our full checklist of indicators on here, we wouldn't be able to see price action so clearly. And of course, this dramatic move, most of our friends at Metastock are not trading monthly bars or candles, but we can use this larger time frame to look for these areas of potential support. And then we might dive down into a weekly or daily chart and find where we want to take an entry within that trend. So let's step down the time scale, Alex. Let's take a look at this on a weekly basis rather than the monthly.
Yeah, this is a weekly chart of Apple, and you can see just quite how clearly those trends are portrayed by the colored bars. What we found anecdotally is that when there's a significant change in trend, it often lines up with a break of important support or resistance, these key levels, in this case, trend lines. When those trend lines are broken and we see color change, now we're just, increasing the confidence with which we're looking at our chart. So you can see those major moves pulled out on this weekly chart, long go trend. When that was finally broken, it broke a trend line. We saw a no-go period there as price moved in a series of lower lows and lower highs. And then again, when it returned to a go trend, breaking above now a downward sloping trend line, we know the go trend back in place. That's the weekly chart of Apple.
Let's dive down to the daily chart, Alex.
Yeah, so the daily chart shows us that we've had such a strong reaction to the sort of the bearish period, right? Apple has been on a daily chart in that no-go throughout the sort of late summer months and into the fall and to the end of last year. And then it really caught fire again as the year came to a close. Apple dealing with all kinds of issues. If you read the news, which I try not to try to be purely technical, but you could see you knew why, and then have had a very strong reaction to that into the end of the year as we saw the go trend come back. We'll check out with those higher highs at the beginning in the midsummer, right? That'll be perhaps some resistance, and then we'll see what happens going forward.
And so just to back up for 1 second, we're looking at this area on the weekly chart. So if your time frame is much longer, you would hold through this period. If you're trading shorter time frames, like a daily chart, this entire area was no-go or neutral, meaning we're out of this trade until it regains its go trend conditions back down here. Now let's take a look at this very small area up in the top right corner on a 1 hour chart.
Yeah, now we'd step down again. You can sort of start to understand how this works when you're in the industry. You could be a trader. You could be a trader working for a PM that says, okay, I'm looking to now get long Apple, or whatever the story might be for what you're doing, and you dive down timeframes to get a good entry or to get out of a position, depending on what you're trying to do. So in this case, we're looking at an hourly chart here, and you can see that was a strong go trend, and it's just come out of that go trend, and it was in a no-go and is now painting an amber bar. So if you've been in that daily chart, reaping the rewards, and now you're looking perhaps for a sensible place to take profit or to get out, then a no-go on the hourly chart might be that time for you. If you're looking to, if your PM or your longer-term bias tells you we're still long on Apple, now you might wait and see what happens as this no-go resolves, and then wait for a new go, perhaps on a smaller time frame, if you're looking to get back into the security. So of course the situation could be different depending on who you are, but using the time frames to know your longer term bias and then using the shorter time frames for sensible entries and exits is the way to go.
And one last one, Alex. Let's take a look at a 1 minute chart. Here we're zooming in so deep, but for those of you who are trading very short-term scalping positions, you can still trade with the trend on your side. And the nature of this part of the presentation is that technical analysis is fractal, meaning it should work the exact same way on any time frame, and that's true of GoNoGo charts as well. So whatever your preferred trading time frame is, you can use these same calculations, these same charts to your advantage, and they're going to work the exact same way. But I want to encourage everybody to at least take a look at 2 or 3 time frames to give yourself some context and some understanding of where you're at in the market cycle. Alex, let's move on from the time frame discussion. The other question we often get is, okay, you guys are talking all about stocks, but I trade futures, or I trade currencies, or I'm strictly a crypto trader. Well, the beauty of technical analysis is that on any liquid and public market, it's going to work the exact same way. But more importantly, let's say if you are just a equities trader, there's still a ton of information to be gleaned from the other asset classes. And it's the correlations between those asset classes that can be very informative to us about what conditions we are investing under and where areas of the market might tend to outperform. So in the CMT program, we learn a lot from the great John Murphy, fellow CMT charter holder. But we also take that next step, which is to not just look at the theory behind intermarket analysis, but also try to quantify what those correlations are between the asset classes and where we can take some advantage of that. That's some of the work by Marcos Katsanos and others that's in there that really dives deep into the understanding of cross asset class or multi-asset class investing. So Alex, let's just look at a multi-chart layout. You can use GoNoGo Trend to kind of simplify what we're viewing, and we can get an understanding of where we're at in the marketplace.
Yeah, and it's so important for us now. You said, people asking us about other asset classes. Well, nowadays, what if you do only trade equities? With the ETF explosion, right? You can be exposed to these other asset classes, even if you're just trading equities. So let's run through these real quick. Equities at this time were a strong go. You can see that we're painting the bright blue bars there. Treasuries as well at this time were a strong go, bright blue bars. Moving over to oil, you can see that we were in a weak no-go at this time. We can bring in a cryptocurrency down the bottom left. We can see that Bitcoin here was a strong go. Gold, again, strong go. These might have changed by the time you're watching this video, but UUP, which we use as the proxy for the dollar, was in a strong no-go as well. So just by zooming out and looking at the asset classes and taking that sort of round the world approach, you can get a sense of where the trends are. I like to talk about the Warren Buffett song that says it's 5 o'clock somewhere. Well, we say there's a trend somewhere, right? You just have to know where to look. And as long as you're diversified, then there is a trend somewhere. Maybe you're out of whatever securities are going down, but hopefully you're in something that's going up. And that's the whole point of being diversified and being a trend follower.
Absolutely. And if it's not of interest to you, you don't have the time to dedicate to understanding that weakness in the US dollar or bond buying of US government treasuries is bringing rates lower, which is inherently a tailwind for risk assets like equities and cryptocurrencies. Or if maybe you don't like to track the oil markets and try to get an understanding of where the inflation measures are coming from, you don't have to do all of that work. In fact, Alex and I love doing that work, and we love doing it for you. So actually, this endeavor began with a subscription research business for institutional investors. We make that available to any trader of any size right through our website, GoNoGoCharts.com. If you're interested, you can subscribe for $1.99 a week to getting 2 pieces of macro research. Every Monday morning, we send out Flight Path, which gives you kind of a narrative form, top-down approach. This is how the analysts do it on Wall Street. Start with the asset classes. We work into the sector groups and into individual securities beyond that. And then on Saturdays, because we like to practice what we preach, we send out a very large chart pack. So we're reviewing longer time frames across global indices and multiple asset classes, just to give ourselves a sense of the conditions that we are going to be trading in before the next week. Hopefully this has been informative to you and you're thinking about using multiple time frames to your advantage. If you have any questions as you're going through this 6-part video series, feel free to reach out to Alex and I, info@GoNoGoCharts.com. Thanks so much.